Netflix isn't just a streaming giant, it's a cultural phenomenon. But here's the million-dollar question. Is NFLX stock still a smart investment or a ticking time bomb? In a world of content wars, ad tiers, and AI-driven personalization, Netflix is evolving faster than your weekend binge habits. Today, we're breaking down the truth behind Netflix's growth, risks, and whether it deserves a spot in your portfolio. And trust me, by the end of this video, you'll see this stock very differently. Netflix began in 1997 mailing DVDs. Fast forward, they changed the way we consume entertainment, turning living rooms into cinemas. But the real transformation came in 2013 with original content. House of Cards wasn't just a show, it was a business strategy, and it worked. Since then, Netflix has poured billions into original programming, spanning languages and borders. It's no longer a US company, it's a global content machine. But here's what most investors miss. The streaming game isn't about subscribers anymore. It's about survival in a saturated market. Quick quiz. How many streaming services are you paying for right now? Be honest. Exactly. And that's Netflix's biggest challenge, retention in a sea of monthly fees. Let's talk numbers. As of Q1 2025, Netflix boasts over 270 million global subscribers and annual revenue exceeding $40 billion. But it's not all popcorn and profits. Content spending is a double-edged sword. In 2024 alone, Netflix spent over $17 billion on content. That's more than the GDP of some small countries. Add rising debt and international market slowdowns, and suddenly, the stock chart doesn't look so smooth. Still, they're adapting, introducing ad-supported tiers, password-sharing crackdowns, and licensing older content to reduce costs. But is it enough to beat the competition or just delay the inevitable? Let's zoom out. Should you invest in NFLX stock in 2025? If you believe in innovation, content dominance, and global reach, it's compelling. But if you're risk-averse, concerned about profit margins, and wary of saturation, it's time to think twice. The real key? Understand your strategy. If you're in your 20s, you have time to ride waves. But don't treat Netflix like a lottery ticket. Treat it like a calculated move. Dollar cost averaging, portfolio diversification, long-term conviction, that's how the wealthy invest. They don't chase, they plan. Would you rather own 10 shares of Netflix or 1 share of every top S&P 500 company combined? Let that sink in. In investing, it's not what's hot, it's what's sustainable. So is Netflix a stock to watch? Absolutely. But is it your golden ticket? That depends on you. Want to avoid the 5 financial mistakes that cost most people their future in their 20s? Tap the next video. Avoid these 5 costly financial mistakes in your 20s. Don't let bad habits ruin good investments. Your wealthy lifestyle starts with one smart move today.